Hey, it's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. Today, I want to add futures day trading tips, and I was trying to figure out where it would fit in, but you know what? It really doesn't fit in anywhere inside the 10 trading tips I put together. So this is a bonus trading tip number 11, and it's called stopping volume. Richard DeMille Wyckoff, or Wyckoff, I'm going to call him Wyckoff, but came up with the concept of stopping volume. At least that's the person that I associate it with. Now, what I want to do is show you what stopping volume looks like. So let's get to the trade itself. Okay, this is the morning of, what is today? May 20th. 2016, and the white vertical lines are the opening range. So those that have watched me talk about it, this is the 8 to 805 area, or the open outcry of the crude oil market. It corresponds on Eastern time zone 9 to 905, but since we're dealing in Chicago time, I want to work with Chicago's time. So this is 8 a.m. to 8:05. Now, it's Friday, and there was nothing really big in the overnights to speak of. But I do want to pay attention to one detail, and as it relates to stopping volume. Now, the detail that I want to bring into the conversation is what has the overnights done prior to you starting your trading during your session. If we look back at the overnights, we can definitely see what pattern. I mean, my 10-year-old son could tell you what this pattern is, right? And you can see it as well. Hopefully you can see it. We're in a what? No matter where you put this line at, let's just use that line right there. This trend line, let me bring that up, the thickness a little bit thicker. So this trend line that's cutting across the charts is in what you would call a downtrend, right? Duh. But you can definitely see the downtrend that is. And when you're looking at stopping volume, normally you're looking at it as it relates to the current swing trend. And since we're day traders, let me back up. I'm a day trader, therefore I'm only looking back as far as a day or two, or no further than a week, to see what the current swing is. Are we swinging up? Or are we swinging down? So stopping volume can be on both sides of the market, but normally you're trying to take this trade in the direction of the swing way of the market. In this case, the market was heading on a down slope. Now, my opening trade was the system trade. It was a CL port strategy, the opening range trade. I went long at 72, and today's tick range at 1/2 R was 8 ticks. So there's your 8 ticks, 1/2 R. And that corresponds with a 64, so an 8 tick hit. The opening trade was a loss of 8 ticks. Now, what we see and what stopping volume means to me, now this ends up being what I call a tiebreaker. After this particular trade is entered, we see this bar right here come in the market, and we see this bar right here. Right here at this time at 8:27, the market is what we call in a tiebreaker scenario. So I need to see, actually let's move this over because you can't see it. I'm talking in that corner. So let's back up and let's get my screen draw tool out here again. So after my opening loss, we move into what's called a tiebreaker. This bar against this bar. So we're in a tiebreaker situation right now. Now, what happens immediately after this is this bar prints right there, and so therefore I'm starting to look on the short side. So once this bar right here prints, I'm looking to take a short trade. But what I also want you to notice is all the blue bars that you see in the market as opposed to the red bars. Now, hopefully it's as clear as day. I mean, if I would ask a 10-year-old, or if I have, in fact, if I'd ask a 5-year-old, what do you see more of as far as volume bars, and bars that are higher than the others? Do you see more blue bars that are higher, or do you see more red bars? And I'm telling you, a 5-year-old can tell me that he sees more blue bars that are higher than the red bars. This is what Wyckoff called stopping volume, and let's call it SV for now. So this whole move up through here is in a trade or a trend channel, and it also could correspond almost to a Gann signal, what I call the fourth time through. But let's not get into that. So because you'd have to interpret the 4 times or whatever. But what you definitely can see is that we have a lot more blue bar volume here than we do red. So what I did on this particular trade is I bracketed out the high, and I saw this right through here, 1, 2, and a 3, and your trade entry was to come in there at 4,889. So this was your entry point, and this particular trade, depending upon when you exited, you could have, and that's where the 38 versus 64 ticks comes in. So what I saw is if you kept the 200 bar SMA into this trade and used it as a trailing stop and followed behind it, well, you could have accumulated basically a 64 tick run all the way down here to 48.25. But when I was working with the trade itself, I noticed that a good area was 48.51 based upon the 2P mark here of 48.50. So that, as it turns out to be, the 48.50 area, and I don't like being on a round number, so that's why I went to 51. Once it went to 3P, I wanted to make sure I took some profit. So, 39 ticks or 38 ticks versus 64 ticks. That's what I'm getting at. So, this is the eye of the beholder. Can you stay within the trade? In other words, when the market was right here, this is some added information for you that watch this far. When the market goes up here, are you willing to risk here versus here? So 51 versus 57 is what it ended up being. So you're giving up $60. In other words, you'd be giving up 38 versus minus 6, 32, right? That's hard to draw on these screen draws, but it's a 32 tick winner. No matter how you look at it, if it would have run you out here, you would have got 32 ticks versus 38. The blue SMA, the 200 bar SMA, could have been a nice little area to get involved with this trade, as it was basing right around this area. It looked like it was getting ready to run up, and that's based upon some volume that I saw over here on the red bars. I was thinking maybe we were going to stop on the downside. So what we end up seeing later on in the morning session is we see this right here, this red bar volumes, and this ends up being the low of the session itself, and then it runs on up and it goes up this way, its merry old way. But what I want you to look at as it relates to the time period that we're looking at is right here. If I look at the time period right here versus right here, and we look right through here, it's a pretty equal day. And if you go back this way in this trading day, it's still pretty equal. No one's really winning this fight, the buyers versus the sellers. But once we reach over to this point right in here between 827 to 835, it's decidedly going the blue way, or in this case it's looking more like it wants to sell off. So that's why it's called stopping volume. It stops the upward movement, as Wyckoff would say, and then it heads on down and goes down from that point. All right, this is Dave Knight here. from 123daytrade.com. I gave you a little bit more details. Now, if you've listened this far in this video, let me let you in on a little secret that I've done over the years. I love the small account trader. And the reason that I love that small account trader is that's what I have become myself. I mean, I went from trading billions to millions to now just thousands, and now I'm at Top Step Trader working to get funded at this point, which, by the way, I'm going to be funded again. But when my blog or my video content and everything that I've put out is for the small account trader, and if you've listened this far in this video, then kudos to you, because all of my content, if you don't have a lot of money, which a lot of us are in that boat, you know, Top Step Trader is a perfect place to be to work through your demons, let's say, and then get into funded status. But all of my trading tips and tricks, and if you just search the blog and go through the information, I think I know it's worth your while. So in other words, what I'm getting at is that you don't have to spend a dime with me and learn how to trade the way I do. If you just follow and look at the blog, look at the video content I've put out, and go in and just go into search mode. I mean, if it's been said better than I've ever said it, you either have lots of money or you have lots of time. A lot of us don't have a lot of each of them, right? We either have a lot of money, or we have a little bit of time, or we have lots of time and a little bit of money. Well, if you have lots of money, well, then I will take you one-on-one, and you can spend, you know, the one-on-one training with me. But if you don't have lots of money, and what you have is lots of time, well, your education should be going through my blog post, going through my video content, going through everything that I put out there for free. Get yourself into earning for a living from the video content and for all the information that I put out there at no cost for you, just to go through it other than your time. So if you have the time and you don't have the money, then spend the time to get your education. All right? That's enough said on that subject. So I guess that'll do it for this video. God bless, take care, and I'll see you on the next video that I put up. Bye for now.